Hi, this is Ken Lake with MAC's Technical Market Update for Friday, July 14th. Been a bit of a roller coaster this week. Markets began a bit of a collapse Wednesday afternoon once USDA crop report came out. The monthly supply and demand report, somewhat bearish the grains, although the numbers weren't all that ugly. Beans might have even been a little supportive here. But nevertheless, we've been up. And if you take a look, well, I'm going to start with Dee's corn chart, but all these days higher. We've got the same pattern in all the contracts, corn, wheat, and soybeans. Many, many days higher, very overbought market. So anytime you get a situation like that, you know you're due for a correction. And the USDA crop report on Wednesday was the catalyst that got that started. The other thing that's playing in here is the fact that the crop conditions reports that we get each Monday afternoon the last 2 weeks have shown some deterioration in the crop, particularly in Iowa and Illinois, for the last 2 weeks. And this week, we begin to anticipate what that next Monday report will be. And this week, we saw scattered rainfall throughout the Midwest, whether too much or too little. We saw rainfall nevertheless, and the trade is probably expecting that USDA crop conditions report on Monday night to at least be unchanged from the previous week. So I think the trade going forward will be contingent upon what that Monday night report says. If we get, we'll trade accordingly depending on which side of unchanged from last week that this report comes out at on Monday. But nevertheless, we saw the run up, and now we've had 3 days down, which 3 days down in a contract like this sometimes signals a short-term trend change. Now, obviously, the long-term trend in Dee's corn is a bit sideways with a 60-cent range. So, the range is pretty wide. We traded pretty close to our target of 420 here. And for customers who I have that have Dee's corn sold already, our target's still 420. I do want to see how the Monday trade turns out, the USDA report on Monday night. And beginning on Tuesday, I'm expecting that report to be unchanged conditions from a week ago. And if that's the case, then I think we have a chance to at least go back into this 405, 410 range. For customers who need to catch up, you probably want to use that range to make some sales. For other customers that have sales on, we're still going to target this 420 area here. Time will begin to run out on us in corn as this crop gets pollinated, so it'll be very important to see what those crop conditions are on Monday night, particularly Iowa and Illinois, who have been experiencing some deteriorating conditions. I want to switch to the November soybean contract, and you'll note that it looks pretty similar. A big run up, 2 days down here with a third day higher actually. So this signals to me that there's no short-term trend change in soybeans. And I think the important fundamental factor here is that the spec fund position is still somewhat short rather than long. If you take a look at our weekly newsletter at mishag.com, you'll see the charts that I put in there this week to demonstrate the position this year versus a year ago. So with spec positions not being short, or I'm sorry, not being long at this time of year, one would think that if they get any sort of reason to cover that short, we could see another leg up here in these soybeans. Won't know that that's true here for a while, of course, but for the most part, our customers have been selling new crop soybeans. We've been doing it since November, and each time we get into this range, we've been sellers. We've avoided sales as this thing fell here. And then again made more sales during this run up here. At this point, we're aside of the soybean market until we can get a clearer picture of how the crop conditions are coming along. I'm going to switch to September wheat. In fact, what I want to do is switch to a weekly view here. I mean, notice the trend since 2012. Certainly a fall on all these prices, and of course when you're going to trade wheat at $9.40, you're certainly going to see a production reaction everywhere in the world, which we did. That turned into having record world stocks, a 50% stocks to use ratio in the United States, and a futures bottom of 367. Saw a big response to this low price last fall with the lowest number of acres in 100 years in this country. So now we're starting to see that production swing lower and price higher. So we think that this is a long-term low here, and that will, even though it may take a while to score prices in higher ranges, long-term, the nearby wheat chart should at least trade the 50% retracement level at 650. I have no idea what the timing would be on that, but long-term, this would be a target. Short-term, targets would look more like this on a daily chart. Somewhere up around 590 on the daily chart is where we would be. And of course, we've seen 3 days down here. So that does signal a little bit more sell-off to come in here with momentum indicators a little bit weak.